So yesterday's Treasury auction, and again, what we can do here, I want to show you this, guys. We're going to flip over to the 10-year yield. If we look at the 10-year yield, this is the daily chart. Now, number one, I gave you guys this support. When we were trading up here, I said this was going to be support. So far, it's been tremendous support. But again, yesterday's price action, what we saw when that Treasury auction hit, and if we flip to the 10-minute chart, look at this move yesterday. And again, I'm going to go back right here. This was when that Treasury auction occurred. Right at this point. Look at the size of that move up on the 10-year yield. We went from 4.55% to basically 4.66%. And again, the concept here is very basic. You want money. I want you to buy some of my debt. You say to me, oh, Gareth, you are way over leveraged. I really don't trust that I'm going to get my money back. So to actually give you that loan, I'm going to make you pay higher rates than what you're offering. And essentially, that's what's going on with the Treasury right now. China, Japan, all these other countries are saying, 33.5 trillion, this debt is going sky high. You know, Washington politics are a mess. You guys can't get your house in order. All of these things, and these countries are essentially saying, you know what? We want more interest on this if we're going to take the risk of giving you X amount of money. Okay, so that should explain it pretty simply. Now, again, we are seeing it coming back in today, so rates are coming back in. Yesterday, this move caused a pretty dramatic sell-off in the market. Today, we're rallying back just a little bit as rates are coming in. Essentially now, we're seeing a calming of the fears. Yesterday, again, fear spiked. Today, rates are coming in. That's telling us we're not as concerned as we were as investors about yesterday's kind of crappy Treasury auction. Another thing that occurred yesterday, right around the same time, Jerome Powell came out and said, hey guys, just to be clear, we may still have to raise interest rates. Now, if we look at this daily chart here of the NASDAQ, in fact, let's even go to the spiders, the S&P 500 here. So what we had seen prior is the Federal Reserve meeting was right down here. Right down here is when the last Fed meeting was. And remember, they essentially came out and said, hey, we're going to probably pause. We're going to wait and see. We're data dependent. They said all the things that coaxed the market to rally higher. Okay? Now, the problem is this, is that Jerome Powell does not really want the markets to rally up substantially. He doesn't mind a small rally, but when you get 1, 2, 3, 4, 5, 6, 7, 8 up days in a row on the S&P for a gain of like 6+%, NASDAQ up 9%, he's not going to be happy with that. Now, you might say, well, why doesn't he want the markets to go up? Well, think about this. If you look, and I talked about this yesterday, if you look at stocks like NVIDIA, right, and we go to the NVIDIA daily chart here, and you see this massive move. From low to high, NVIDIA went 23% to the upside, 23%. Well, that's $1 trillion company. When you go up 23%, if you're just $1 trillion, that's $230 billion. Then you take Apple, right? So again, here we have, let's just do some numbers, right? So $230 billion, billion. Then you look at Apple. Apple went up about 10%. On a $3 trillion, that's $300 billion, right? And then you go to Google, then you go to Amazon, and you have another, $150 billion, and so on and so forth. And then you go into the rest. So when you add up all the Magnificent Seven gains, the billion-dollar company gains, it essentially comes out to be like 1.5 trillion with a T dollars that was added into the system in basically a week and a half. And again, that's why, in my opinion, Jerome Powell came out yesterday and actually said something that was hawkish, and it was kind of random, let's be fair. It wasn't like it was scripted. It wasn't like, hey guys, at this time we're gonna make a statement. It was much more random than that. It was kind of at a different press conference, a different speech, where it got interrupted and he let a curse word fly, and it was like, I mean, everyone's just loving that. It's to be honest, it's nice to see the humanity of that he gets annoyed at the same crap that we get annoyed at, right? So again, that was interesting, but my point is that he has to make this comment yesterday to bring markets in. Otherwise, you're adding way too much money to the system, and it's going to push inflation up. And remember, the Fed doesn't even have inflation under control yet. They haven't brought it under 2%. So you can't be flooding the market with $1.5 trillion in capital gains, essentially, in a very short amount of time, where people are going to go buy more shit, excuse my language, they're going to go out and they're going to do that, and it's going to increase inflation. It's just the nature of the beast, guys. When you have stock markets going through the roof, it increases inflation because people feel wealthier, they go out and spend more money. If you don't have the supply to meet it, it's going to force prices to the upside.